Hello, my name's Fiona. I'm the Joint Managing Director at International Private Finance. We specialise in arranging finance for clients looking to purchase a property in France who are non-resident in France and based primarily here in the UK. Today I'm going to talk to you about how best to improve your chances of success for a French mortgage application. The French banks are traditionally more conservative than we're used to here in the UK, primarily because the property that you're purchasing is in another country to where you're living, so immediately they see that as a greater risk. Equally, French banks are more cautious in the way that they lend, and they've always had a very different way of calculating how much someone can borrow. So in the UK we're very used to lenders using an income multiple, and in France they do it differently and they use a debt to income ratio. What that means is they're looking at how much of your income is taken up with your existing finance or any contractual obligations that you might have, such as a loan, a rent or a mortgage, as well as looking at the cost of a new French mortgage. And the way that they do that is they allow approximately a third of your income to be taken up by debt. So for example, if your income is £3,000 a month, then £1,000 needs to include your current mortgage, any personal loans, any minimum repayments on credit cards, as well as the cost of a new French mortgage. So there are a number of things that you can do to improve your chances of success with a French mortgage application. Firstly, it's important to get your finances in order before you apply for a mortgage, and you've got plenty of time to do that. I would recommend making sure that your bank statements are in good order. All of the banks in France will request a minimum of 3 months worth of bank statements, and they will go through those line by line. So it's important to make sure that you don't have any unpaid direct debits, any cheques that have bounced, or going into or exceeding an overdraft limit. That will dramatically improve your chances of success because it shows the bank that you're able to manage your finances successfully, and equally they're looking for a capacity to save. What that means very simply is in looking at the calculation that I spoke about earlier, including £1,000 against a £3,000 income, they also want to see that at the end of the month you actually have some spare money to pay for and be able to afford a new French mortgage. So they'll look at your bank statements, and at the end of each month, if you're going into your overdraft or exceeding an overdraft limit, they would assume that any additional payment is going to make things very tight. If, however, they can see a monthly standing order or payment to a savings account, then they know that on a monthly basis you can quite comfortably afford a new monthly payment. So getting your finances in place and looking at your bank statements, showing the banks that you have what they see as a capacity to save, will greatly improve your chances of success. I think a lot of borrowers underestimate the level of disclosure involved in obtaining a French mortgage, and when doing making some inquiries and completing application forms, very much try to simplify their scenario here in the UK, or simply don't realise that all of the information is relevant. So my top tip would be to be as clear and transparent and open with the bank or broker that you're dealing with to make sure you've given them the full picture. The banks in France are extremely nervous about people hiding information or not giving them that information, and as a result they are extremely forensic in the level of information that they require from a borrower, and we often find clients are quite surprised by the level of detail required by the French banks in comparison to the UK banks. It's also important for borrowers to understand that very recently there has been new regulation that has meant that anyone arranging a mortgage in the UK for buyers looking to purchase a property in France are now coming under the FCA, which is only a good thing for borrowers because it's meaning that the practice that they're used to obtain a UK mortgage is being standardised across the French market, and hopefully making the language and the terminology as familiar as possible. Using a broker can improve your chance of success with a French mortgage application. The first thing to look out for is to make sure that they are FCA regulated and have the CMAP qualification that we recognise here in the UK. A broker can improve your chances of success because, just like here in the UK, they know the market and work with a number of lenders in order to be able to give you a great choice of products. But just as importantly, they understand the criteria of the French banks. Most of our clients have never purchased a property in France before. They have generally purchased a property in the UK and feel very familiar with that, but not in a French environment, especially if they don't speak the language. But it's more than just the language where a broker can help. They can talk you through the whole process, hold your hand, let you know what to expect, and more importantly, foresee any challenges and make sure that they're overcome. They'll have a good relationship with the lenders and are able to show you which bank's going to be most suitable and which bank you're going to have the best chance of success. Unlike here in the UK, where anyone can be confident pretty much that they're going to be able to get a mortgage of some sort, in France it isn't like that at all. It's far harder to get a mortgage. So it's really important that the broker looks at your profile and very quickly tells you whether or not you are or are not able to be successful, and you don't run the risk of making an application with a lender that goes on for months and months without knowing whether or not you're going to get a mortgage. A broker, within a few minutes of doing a detailed fact find, should easily be able to tell you what your options are. I hope that you found today's discussion useful in helping you understand the differences and what you can do to improve your chances of success. If you'd like any further information, please feel free to visit our website, which is www.internationalprivatefinance.com, or call us on 0207 484 460.